Hello everyone, I am Pratap here. We are at part 4 of lesson 17. In this lesson, let us discuss about price overextension. We can also call it as a price overextended. This lesson is having dependency on earlier lessons. In case if you did not attend the earlier lessons or this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. So all the earlier training lessons can be accessible from our YouTube channel. There from the home page, scroll down to the playlist supply demand zone price action course. So click on this playlist. You will get access to all our training videos. Even I have provided the link to this playlist in this YouTube video description. There you click the link and you will get into this page. Once you get into the page, scroll down to the bottom of the page. All the lessons starting from lesson 1.1, all the lessons are available in an order. So please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. Please also join there so that each time we release our video, you will get an update in that Telegram channel. Now let's get into our lesson. Price over extension. What is price over extension or price over extended? In trending market, price travel too far away from its EMA 20. Previous session we discussed about EMA 20. So from the EMA 20, prices are traveling too far, maybe towards the up direction or maybe towards the direction. If prices are moving too far from the EMA 20, that is called price over extension, or you can also call price overextended. Look into this chart. Currently, where is the EMA? So this is the EMA. And currently, where is the closing price? Here is the closing price. Look into the distance from the EMA until the current market close. There is a huge difference. Prices are far, far away from the current EMA. So that is what we learned. If prices are moving too far away from the EMA, we call it as a price overextended or price overextension. Okay. So what will happen when prices are overextended? When prices are overextended, mostly they will try to pull back. The prices will be trying to pull back towards its EMA. The next point. When prices are overextended in trending market, price will likely pull back to EMA 20. Prices will likely pull back to EMA 20. Here you may ask a question. Because the prices are overextended. Because the prices are overextended, can we go for short trades? See, when there is a supply zone, then only you can go for the short trades. If there is no supply zone, you cannot. Sometimes some stocks might be all-time high stocks. They may not be having supply zone. At the time, short trades are not allowed. Sometimes the trend may not be supporting. Even if there is a supply zone, trend may not be supporting. Then you cannot go for the short trades. When you want to go for the short trades, always a trend should be supporting you. See here what happened? The same stock, after it is overextended, then the prices are started moving down and finally reached the EMA 20. This is called pullback to EMA 20 after price overextended or after price overextension. So this is what happens to most of the stocks or majority of the stocks in trending market. If there is a overextension, generally pullback happens till the EMA 20. Why? What is the reason behind this? Previous lesson we already discussed. When prices are moving far away from the EMA, there are higher chances that traders wants to book the profit. They would have already got a good profit. When they start selling the stocks, what happens? The prices will pull back towards the EMA 20. That is what I explained in the last session. And we named it as a correction. Generally, we call it as correction. When there is a overextension, when prices are falling, that is nothing but correction in the market due to the profit booking. The same correction in technical terms, we are saying pull back to the EMA 20. So when correction is going to end, that is also we should understand. Normally in market, many people who are not aware of these concepts, they never know when correction will be ended in the market. It is a bull market, prices are moving up, everybody is having a fear all of a sudden, they get a fear. Why fear? Because prices moved far away. They moved far away. Okay, here we are comparing with EMA, but the normal people never know. They already brought, prices went far away. Obviously, some fear comes to their mind. What if prices go down? Or whatever the profits we get, all the profits will be reduced. So with that fear, what they do? They try to book the profit. The same time, because see, technical analysis is a mass psychology. Same time, like how you are thinking or like how I am thinking, so many people also might be thinking. Then everybody will start selling. Selling means for booking the profit. Then prices will be falling down. How long it will go down? The novice traders may not be having clarity, but we are professional traders. We know all these concepts. We know that there is a concept called overextended. We are clearly seeing on the charts. And we know that this overextension will be completed when there is a pullback towards its EMA 20. So in trending market, price overextension completes when prices pull back to the EMA 20. Once prices reach to the EMA 20 in the trending market. Once prices are pulled back to the EMA 20, the overextension will be completed. Look into this chart. Once after reaching, some kind of consolidation took place at EMA 20 for few days, because this is a daily chart. After that, the prices again started moving up, because people slowly the long positions are building. That means people whoever booked the profits, everything is gone. Now there are no more supply in the market. Now demand is started dominating. Again prices once again it will start moving up. Once it is starting moving up, more and more people will participate. Again we will see one more swing in the next swing in the market. But as a professional traders, what we need to observe? We should observe currently the stock is overextended or not. If it is overextended, what we have to do? We should be very careful for planning our long trades. Or if there are any supply zone during the pullback, during the overextension, if there are any supply zone, you can plan for short trades, provide the trend and other parameters supports you. Or what else we can do? We can wait until the prices pull back to the EMA 20. You don't do anything, just simply you wait. until prices reaches the EMA 20. What else we can do other than this? That we will discuss in the next slide. But before that, one more important point we need to complete. Price overextension can be measured in two types. Important point, please observe carefully. Price overextension can be measured in two forms or in two ways. One is bullish price overextension or bullish price overextended, or bearish price overextended or bearish price overextension, whatever the way you call, both are valid. Bullish price overextended and bearish price overextended. What does it mean? If you are seeing an extension, price overextension from your EMA 20 towards the up direction, that is called bullish price overextension. Exactly the reverse. From our EMA 20, if there is a price overextension towards the downside, that is called bearish price overextension or bearish price overextended. Let me show you both the examples on the charts. If you look into this chart, Maruti Suzuki and daily chart, this is a daily EMA. See the EMA, the blue color line, and see the current market close. So it is a overextended. In fact, it is very much overextended. I can say super overextended. Maybe I'm just telling an English statement. That's it, not technical word. We always say just overextended. Why I'm saying? Because prices moved too far. When they move too far, anytime we may see a pullback towards the EMA 20. That possibility is there. See, generally pullback, one point, important point, please concentrate here. Pullback, generally you can see in two ways. One is prices reached, it's overextended. From there, sharply the prices again it will fall. And finally, after reaching this EMA, some sort of consolidation will take place. That is what you have seen in the previous example. Maybe few candles, they move around this EMA 20, and then once the consolidation is complete, they again start moving up. This is one kind of chart you can see. And the second kind of chart, what happens? Prices won't fall. Some kind of consolidation will take place. Maybe the next 10 candles or 15 candles, prices will be moving here and only. And what happens finally? Prices will be there, but EMA will be moving up, and finally they reach where the price consolidation is taking place. The moment the EMA reaches here, then price overextension completes. Once price overextension completes and the bullish market still continues, once again prices will be started moving up. These kind of two different things you can observe. Let us look into charts. Once we get into the charts, we will see. See, but this example is bullish overextended because from the EMA prices move towards the up direction. See the next example. This is Bandhan Bank. See in the recent price, what happened from the EMA? The prices move towards the down. There is a price overextended, but towards the downside. Because the overextension is towards the downside, we are calling it as a bearish price overextended or bearish price overextension. Either way you can call. So definitely this overextension has to be completed. So at the time what will happen? Most probably the prices will be moving up, and once they reach the moving average, probably the overextension will be completed. Or second possibility, the prices will be moving here only for next few candles, maybe in next maybe 5 to 10 candles or a little more. So by the time slowly the moving average will be reaching, and we can say the overextension is completed. But whatever it is, you have to see, always you see overextension in two types. The first one is bullish and second one is bearish. This is the bearish overextension or bearish price overextended. And the next very important points, please concentrate. This is a practical related points. And these points will help you for your trade while trading, especially positional traders or swing traders. See, pull back to monthly or weekly EMA 20 demand or supply zone. Assume and monthly there is a overextension towards the monthly EMA 20, comparing from monthly EMA 20. Or on weekly chart, prices are overextended, comparing with weekly EMA 20. So obviously what happens? Once prices are overextended, it has to complete its overextension. When it will complete, once prices reaches the monthly EMA 20 on monthly chart or weekly EMA 20 on weekly chart, then overextension will be completed. Once overextension is completed, when overextension will be completed? When there is a pullback to monthly or weekly EMA 20 demand or supply zones, depending on bullish or bearish overextended. Now what you can do when pullback to the monthly weekly EMA 20, what we can do? We can be used for positional or swing trading. That means the best way to buy the stocks for swing trading or positional trading, whatever the name you use. Once the overextension is completed on monthly chart or weekly chart, you can plan your positional trade or swing trade. Mostly in positional or swing trades, we go for cash trades. Mostly. You can also go for swing trades also, but you should have guts to hold the stocks for a long period. If you take 3 months, that is the maximum. If you take a 3 months future in stocks, you have to hold. But otherwise, mostly we go for cash trades as part of positional or swing trading. So the best way to take cash trades is when overextension is completed. Please remember, I am repeating because it is an important point. Again, I am repeating the same point. The best way to go for cash trades is when the overextension is completed on monthly or weekly charts. But remember, it should be in bull market, because cash trades mostly, if you want to go for cash trades, you go for buy orders only. And short orders won't be supported by the exchange. Only intraday only you can, but we are planning for swing or positional. That means you need to hold your shares in your demat account. So obviously you have to look for only, you have to look for only cash trades. That is the long trades. That is your buy orders. So when you have to do in the bull market, the market should be bullish. The trend should be bullish. But overextension has to be completed on monthly time frame or weekly time frame. When it will be completed, the moment prices reaches the monthly demand zone on monthly chart or weekly demand zone on weekly chart. And those zones should be having confluence. Which confluence? Monthly demand zone confluence if it is monthly chart, or weekly demand zone confluence. What kind of confluence? Not zone confluence. Now we are talking about EMA confluence. At the time of overextension completes, that is pullback to the EMA 20, in that location, if there is a monthly demand zone having confluence with monthly EMA, that is the best place, that is the best time you can go for cash trades. Same thing weekly also. Suppose if your monthly zone is not having EMA confluence, your weekly zone is not having EMA confluence, then what to do? See, there is a pullback to the monthly EMA, but the monthly EMA is not having any confluence with the monthly demand zone. Then what to do? Very simple. If there is no monthly zone, you can look for lower time frame zone having a confluence of that monthly EMA. Or if it is weekly chart, confluence with weekly EMA. That means you are looking for a monthly chart, but your monthly EMA is having confluence with daily demand zone. Daily demand zone is a lower time frame demand zone. So definitely you can plan a cash trade. That means a higher time frame EMA can be confluence with lower time frame demand zone. Same concept you can apply for supply zones also. Always remember this point. Let me repeat. A higher time frame EMA can be having confluence with lower time frame zone. Then you can plan, even then you can plan your cash trades. Let me show you these examples on the charts. You will get clarity, but let me read this point. LTF zone having monthly or weekly EMA confluence can be used for trading even if there is no monthly or weekly zone EMA confluence. The meaning is what I already said. Let me repeat again. You have a monthly chart. In that monthly chart, EMA is there. Earlier there is a price overextension. Now overextension is completed. Prices are pulled back to the monthly EMA and monthly chart. But during that pullback, you did not find any monthly zone confluence. Now what you can do on the same monthly EMA, you can check, is there any daily EMA? Sorry, is there any daily zone? If the daily zone confluence is there, you can plan the trade. If it is a demand zone, you can plan long trades. But you have to plan in cash because it is a positional trade or swing trade. Let me show you with examples, you get better clarity. So let us look into some practical examples that describes this scenario, both the scenarios. One example I will show you, having confluence with monthly EMA with monthly zone. And another example I will show you, not having confluence with monthly zone or weekly zone, but having confluence with daily. Those two examples, let us look into the charts. Look into the Nifty chart. Let me go to the monthly time frame. Look into the recently here. See, monthly prices are moving up. There is a price overextension from compared to the EMA because prices moved far away. Let me draw a vertical line, you will get clarity. See, at this point of time, look into the EMA. This is the EMA, and this is the your price. So definitely there is a overextension. And now what happened? The overextension is started trying to complete. The overextension on the monthly chart is trying to complete, and then prices are slowly moving towards the EMA. That means there is a pullback. There is a pullback towards the EMA. And finally prices reached. Once prices reached, the overextension is completed. And what I am saying, this is the best time to plan your cash trades or long trades. This is the best time for positional or swing trading. You may ask a question. This is a nifty index. How can we take trades on the cash? Yes, you can take trades. You have a concept called ETF, Exchange Traded Fund. And Nifty Bs are there. It is an ETF. Nifty Bs is an ETF. ETFs you can buy as if how you are buying your shares. Whatever the value on the ETF you are having, once price reaches here, with that value you buy. And once the price is moving up, it will reach some point where you want to book the profit, that day you sell. That way we can take cash trades even in index also. From mostly all the indices, Nifty IT, Nifty private banks, Nifty healthcare, Nifty pharma. In all these indices, there are ETFs are available. And one of those ETFs you can buy. Once you get the profit, you can sell. That way you will get the profit. That is in cash. I'm talking about the cash trades. Okay, now here, where to buy Nifty or Nifty ETF? Once prices reaches this EMA 20, that indicates overextension is complete, and currently the trend is also uptrend. You have to observe that also. Because all these concepts are applicable only in the trending market. That is what I clearly told. EMA should be always used only in trending. Ranging market, you cannot look for all these things. They are not valid concepts in the ranging market. So in trending market only we see the pullback till the EMA. This is the best place. Now is there any demand zone here? Once it reached here, maybe this demand zone might have been already pierced by this time, and below there is no demand zone. Because there is no monthly demand zone in this area, once prices reached here, what you can do, maybe there is some slight confluence is there, but anyway, let us assume it is not there, the earlier demand zone. Maybe, I don't know, this leg out is also not valid. So that is the reason why, what you can do, you have another choice. You can go to the lower time frame, you can go to the daily time frame. In this area, when price overextension is completed, at the time if there is any demand zone, there you can plan a trade. So for that, what we have to do, because this is a monthly, the moment I change to the daily time frame, I will be seeing daily EMA. So for that, what I am doing, I am marking a horizontal line that indicates, this line indicates monthly EMA. So already I created some templates. MEMA 20, it will just give a name for this horizontal name, it will give a name in the right side. See here, I got a name monthly EMA 20. So if I go to the daily time frame, this line is visible. Now I can identify this is the area monthly extension. overextension, price overextension is completed. Monthly price overextension is completed. So let me go to the daily time frame. Mostly you will find a zone at lower time frame. During the higher time frame, when price overextended is completed, when price overextension is completed, you can find mostly you will find a lower time frame zone. Maybe you may see in daily time frame or maybe 125 minutes time frame. So where is it? So here. This is the area price overextension is completed. In that area, is there any demand zone available? Maybe you can draw a zone like this here. Came down and then prices moved up. Maybe one candle is down, but immediately it is not sluggish. Sluggish means maybe next 3 to 4 candles or maybe 4 to 5 candles, prices should move within this leg candle only. So it's not like sluggish. You can consider is a follow through candle. Nothing wrong. Maybe one immediately is not there, but after that immediately recovered. So that way it is a valid zone for your and moreover let me change it to daily color. Let me change the color to daily demand zone, light color. See, already this zone is tested. Now you may ask a question, how can we take a trade second time? Maybe this is a powerful zone. That is the reason why this zone is available. At the time price over extension is completed at the monthly. See here. Here the price over extension is completed. To get clarity, go to the monthly time frame again. Already we drawn the zone on daily. See here. Previously also on monthly time frame this zone is tested. And see here price over extension. At the time monthly, this is a daily zone, but this daily zone is having monthly EMA confluence. It is having monthly EMA confluence. When the candle is reaching here, monthly EMA confluence is there. Why monthly EMA confluence is there? Because that is the time price over extension is completed on monthly. Exactly there we draw the zone. Obviously, automatically you get monthly EMA confluence. This is quite natural. When you will draw this zone? When price over extension is about to complete. Not after completion, about to complete. Assume you are on this day. Price over extension is not yet completed, coming very close. Now you draw the zone because monthly time frame we didn't find any proper zone. That's why you are trying to draw. Why it is not trying to complete? Because this leg candle is a medium sized leg candle on the monthly. It is not a large candle to consider leg out. So that's why we went to the daily time frame. We drawn the zone exactly where it is going to complete the. See the next candle it is completed. The moment price this is completed, you can plan a trade, and this is your stop loss. And then see what happened. Once you would have taken a trade here at what price? At 16,828. Let me say 16,830. Somewhere at that price you have, let us assume you brought Nifty 50. Now today what is the Nifty value? 22,040. That means 5,200 points, close to 5,200 points. We got the profit. 5,200 points means it is excellent. It is almost close to 30%. 30% return you got. Within how much time period? This is on March 23. Now we are at February 24. That means Nifty gave you 30% return within 1 year just by using the concept price overextended and pull back to the price overextension completed and pull back to the monthly EMA. Mostly what you do? Cash trades we take because you are a positional trader or a swing trader. So 30 Nifty gave you 30% in 1 year from its pullback to the EMA 20 after completion of the price overextension. That is an excellent. So this is the power of EMA. Power of EMA. Okay, some people expect within 1 year my amount should be doubled or tripled. That is the way we all plan and ultimately we get losses. But this is the true practical scenario. Some people trade only on Nifty. They don't focus on any other things, only on Nifty. So those who wants to trade on Nifty, positional trading by buying Nifty ETFs. This is one best approach, a powerful concept. See how Nifty is keep on respecting the time when it reaches to the EMA 20. So this is one example. And another example, let me show you Reliance. Pull back to EMA. The recent, I'm talking about the recent pullback. This is a monthly chart. So here we have the recent pullback, and here we have a zone drop 1, 2, 3, 4, 5 base candles and a rally candle. Actually, this is the stock. This is the zone identified by our NeoStock software. Actually, I checked with our software and then I'm giving you this example because you should also understand how our software is also working. We have a monthly zone. So that means, you see, in the previous example, there is no monthly zone confluence. That's why we went to lower time frame, there we have drawn. Now see, the monthly time frame. Directly it is having a confluence, EMA confluence is there, this zone, at the time prices entered into this. And also price over extension. See earlier there is a price over extension. And this price over extension is completed the moment prices enter into this zone. So where to take the trade exactly? Because this is a very big zone, risk is very high. So generally what you do? You will do zone confluence. Inside you will draw a weekly zone. Inside the weekly you will draw a daily zone. Mostly at the daily you will take the trade. Because this is a cash trade, directly you will take a trade on the daily zones. So what I am doing now, I am shifting to weekly time frame inside so that I want to find a good zone inside weekly zone. If you look into these weekly zones, we have a rally base, but this is not a valid. This is a drop candle. So we can't consider, not a valid zone here. Maybe you can draw a zone here, drop, base, rally. One weekly zone you can write. But even before there is one more weekly zone is there. We have a rally, base rally is there. Because, sorry, not rally base, drop base rally. Because this is a drop candle, the low of the leg in, the low of the base candles, the low of the leg out, whichever is having the low, that you need to consider for your digital line. Because out of these three, leg in is having the low, because this is a drop candle. If it is a rally, you don't consider. You will consider only base and leg out in rally base rally. But drop base rally, we consider all the three. So we have drawn. You may ask a question. There is one more drop base rally. Can't we consider? Yes, you can consider, but the thing is, this is a reflection from here. But what is your original zone? This is the horizon. And orders it picked up from this zone, and then the zone is further created. That means even if you draw, again you have to consider both as LOTL. You have to consider both as LOTL. But where is our EMA? Monthly, let me draw. We forgot to draw the line, monthly EMA. See, here is the monthly EMA. Let me draw when prices reached. Here we have a monthly EMA confluence. The template, it is a monthly EMA 20. Okay. Now let me go to the weekly. So exactly at a weekly zone, there is a confluence. This, what to say, this weekly demand zone is also a valid demand zone, because this weekly demand zone is also having confluence of monthly EMA. So two conditions satisfied. One is monthly zone is having monthly EMA confluence. Now weekly zone is also having monthly EMA confluence. Suppose if you draw a zone here, drop base rally. Now look into this monthly zone. Is it having a, let me change the colors. Okay. Now look into, compare the first weekly zone, and this is the bottom one is second weekly zone. Which zone is having monthly EMA confluence? The first one is, the top one is having monthly EMA confluence. That's why this is not valid, even though it is a valid inside, but zone confluence point of view, monthly zone confluence point of view, this is the right area where you should plan the trade. Generally, we get doubts when we have two zones inside the higher time frame zone. Here, higher time frame is monthly. Inside the monthly, these two ITF zones are there. So, which zone we have to give importance? Many times people get this doubt. Probably the zone that is having confluence with higher time frame, that is monthly. That way you can give priority. So that's why we are deleting this zone, and our trade, our focus should be within this zone. Okay, fine. Now again, further can we fine tune on daily? Yes. Go to the daily time frame. In daily time frame, we have a drop, base, rally. This is one you can draw. Let me change the color to daily time frame. daily demand zone. See, now this daily is inside. Now you may ask a question. See here, maybe here we can try again another zone here. Yes. But this is LOTL scenario. And moreover, this zone picked up the orders from this zone. But look into this zone. Is it the right zone or anything else is there? There is one more zone here. Rally, 3 base candles and a rally. And this demand zone is also again having confluence with this. But you may say this is not exactly at the EMA. See, generally you have to observe sometimes prices move a little below the EMA, pick up the orders and go up. Now you may ask a question. Anyway, this is LOTL. From where it will pick up? From the top one or from the bottom one? From either where? From either places it may pick up. But actually when prices came to the monthly time frame, where the prices came, let me show you on the monthly time frame. See here. This is our monthly. And here we have two zones. This is one zone, daily zone. This is another daily zone. The first daily zone is pierced. And the second daily zone is orders picked up. Suppose if you plan trade in the first zone by ignoring the second one, maybe you might have hit the stop loss. Now let us move on to daily. You get better clarity now. So in this price, this is the price monthly, price overextension took place. Prices reached the monthly and little below it went because see, they can't take exactly at the monthly line. They go a little below and then again picked up. But anyway, we have two zones overlapped. Which zone you have to give priority? This is one confusion most of the traders will be having. So that's why one solution what they do when there is a LOTL, they combine both the zones. Many people take trades at the first zone and the stop loss is at the second zone. Because of that, what's happening? The risk is increasing. If the risk is out of your limit, then can we plan the trade? If the risk is out of your limit, can we plan the trade? It is not possible. But still we can plan. There is another concept called position sizing that you will be learning in lesson 19. Next lesson is 18. After that, lesson 19, you will be learning position size, stop loss buffers, all those concepts related to some concepts related to risk management. That is an important session. At the time you will understand. Even the risk is very high. Still you can do position sizing. But that position sizing is possible only in cash trades. In F&O segment, it is not easy. Unless you have a huge capital in the F&O segment, still there also you can plan. Probably you are having a huge capital. You are buying maybe 10 futures or maybe you are buying some 100 options. There also you can do position sizing. Instead of buying 10 futures, you may buy only 1 or 2 futures based on that concept. But this position sizing concept is best suitable for cash trades. So that way you can buy some shares, but you may not be buying the expected quantity. Your quantity will be reduced. If anything happens, your loss also will be reduced. And if it is successful, the profit will be within whatever your expected level. But the point is here we have two zones. Which zone you have to give a priority? It is an unknown concept to majority of the traders. I can say almost all the traders. Mostly they combine. That's why LOTL concept is developed. You take a trade at in LOTL, you have two zones on the same time frame. The first zone you take the entry, second zone you keep the stop loss. Okay, but for our software point of view, we have an advantage. We have already developed an advanced software. Our advanced software identified the zone below is a high liquidity zone. Let me delete the top zone. This is the zone overlapped with weekly. See, we have a monthly zone. Inside monthly, we have drawn the weekly zone, and within the weekly, overlapped with the daily zone. It need not be exactly in the middle, either at the proximal line or distal line, or maybe exactly in the middle. The zone confluence can be there. That is what I explained clearly about zone confluence. But in this example, the weekly distal line and the daily proximal line both are overlapped. So it is a zone confluence. And moreover, this zone is a high liquidity zone. Previously also, I think in phase 1, once I told you about high liquidity zone. Why we are calling high liquidity? That is the area so many pending orders will be there, institutional pending orders. There are higher chances that institutions again and again in the same zone they will keep on adding new orders. Our software identifies using some special algorithms by analyzing a huge historic data. Manually, it is very difficult to identify such kind of zones. So with the help of our software, we are able to identify this zone is a high liquidity zone. Definitely below this zone, high liquidity zones are not easy to violate. Of course, they also get some expiry period, but it's not easy. And moreover, EMA confluence is there with the monthly time frame within this area. There is a pullback and price overextension is completed. There is a pullback to EMA. That means monthly EMA and the prices, monthly prices, they are reached to that level. Exactly at that level, we have a high liquidity zone. And it is very difficult to let the prices go below that, because sometimes, what happens in this monthly EMA, sometimes prices may go even far below and then they will start move. At that time, our stop loss will hit on daily time frame, because we can't keep this entire monthly zone as our risk. It is a huge risk. So we have a confidence that there is a high liquidity zone. Mostly there are less chances to go further, go down. You may ask a question, how we identified this is a high liquidity zone? Our software is having a feature, let me show you. Actually, I thought of telling about software after completing phase 2 training program. But maybe this is a time to give you some introduction about some of the concepts. We have a concept called top-down analysis report. In that, in daily time frame, let me copy the reliance. Here, the symbol, the stock code is reliance. So daily time frame, I am generating supply demand zone chain. That means in daily time frame, whatever the data my database is having from 1994, from the year 1994 till the date, how many possible demand and supply zones it will get, everything it will list. I just clicked. It is a costliest operation. It takes time for processing this. And moreover, running on the battery. Okay. See here, the last zone, 87, it is in the zone is in the year 1996. There is a zone, reliance zone. That's why I told you from the year 1994 till the date it will analyze. It will display all the zones. And in that, what is the leg out candle? 26th May 23. Let us check. In the column, there is a column leg out. 26th May, any leg out is there? Yes. Look into this zone. 22 May, we have a leg in. After that, we have 3 base candles, and after that, 26th May, we have a leg out. And look into this. Which element? This is fifth one. This is the fifth column. And there is a zone. The second column is zone. And there we are displaying S underscore DZ. S underscore DZ means it is a high liquidity zone. Symbolically, I have given a name of support. S means a short name for support. Please remember, it is not support and resistance concept what you have seen in old technical analysis concepts. I just gave a name to mimic. It is something like supporting or resisting. But this algorithm is completely different. So I told you earlier, high liquidity zone supports multiple tests. If it is not a high liquidity zones, mostly you look for fresh zone. Only one test only you will accept in a zone. But in high liquidity zone, it supports multiple tests. See, already tested 3 times. The third time is the one last we are seeing. Because it is a high liquidity zone, obviously there are higher chances price does not go below this. That way you would have waited prices entered into this zone. But there is a risk. Sometimes before reaching the one that is there above the LOTL zone, there itself it will take an entry and it will move up. That possibility is also there. That's why while taking, especially in LOTL entry, the higher time frame, the upper level zone, it's not time frames, I'm sorry. It is the upper level zone. The one we are seeing is lower level out of these 2 levels, LOTL. So obviously you have to plan the trade. Because those people who cannot afford this much risk, probably they would have waited prices enter into this. Otherwise, you would have ignored this trade. You would have looked for some other trade because your risk is very high. You don't want to afford that much risk. But anyway, whatever it is, high liquidity zone, most of the time high liquidity zones area prices will enter. Because that is the area real order flow is there. In remaining zones, there is no guarantee how strong the order flows. High liquidity zone areas, order flows are very strong. Many times institutions keep on adding new orders into that zone. That's why again and again prices will be testing the same zones. See, after entering into this, after that, look into the Reliance on daily chart. On daily chart, it's keep on respecting because a daily trend is also changed to uptrend and keep on respecting. How many times it respected the EMA? See the pullbacks. This is the first pullback. This is the second pullback here. This is the third pullback, almost close to this. Fourth pullback, fifth pullback, sixth pullback. And now we are waiting for seventh pullback. Now we have to see the prices will come and get the support here, or some kind of consolidation will take place and moving average reach that level. That we have to see. See, anything will happen in general. See here, this is a best example. This is a best example for consolidation. See, prices are within this area only. Here only prices are moving. That means consolidation took place. But what happened? Moving average was keep on moving. Prices stayed there only. The moment moving average entered into this area, see how strongly Reliance stock moved up. Now came down. Once again it took support. That means there is a pullback. You may ask a question. If we want to take a trade, there is no demand zone here. How can we plan our trade? That's why what is the point I told you? In higher time frame, assume you want to take a DIT trade. Because EMA is confluence. So in daily demand zone, there is no confluence. What you can do? Still you can go to Lower time frame 75 minutes or 15 minutes. You check if there is any zone is available within this area. Let me draw a daily zone for remembering purpose. This is the daily EMA. Let me change the template to the weekly. I think daily EMA I did not create a template. Anyway, I do one thing. I will change the color to blue color or red color so that we can understand. Not text. Okay, let us assume this red color line is daily EMA. So near this, a little below or little above, we should identify a zone. So for that, what I am doing, I am going one time frame below, that is 75 minutes. Here there is a zone. See here we have a zone here. But there is a gap is there within the gap area. It is pierced, but orders has been picked up. Maybe you can look into 125 to get clarity. 125 is also same. Let us go to 15 minutes. That is the place because in DIT, 15 minutes you take your entry. In this red color line, is there any zone? See, perfect. This is 75 minutes zone pierced, but this is the real demand zone, 15 minutes demand zone. Because our entry zone should be 15 minutes. We have a 75 minute zone. But 75 minute zone, we didn't have any demand zone. See the structure of the demand zone. This is the advantage of going for fine tuning the zone. The moment you go to the lower time frame, what you are seeing in the 75 minutes, you are not seeing any demand zone. In the 75 minutes, you have a rally candle. Maybe this is a rally candle, or even you can consider this is a rally candle in the 15 minutes. You have two base candles in the 15 minutes, and then you have a drop candle. The structure is not at all good. That's why this zone will be easily violated. That is what happened. This zone is violated, 75 minute zone. But where we have the order flow, 15 minute zone. But is this 15 minutes good structure? That doubt also you should get. For that you need to go to 5 minutes time frame. Let's go to the 5 minutes time frame. And let us check the structure of the 5 minutes. Is it good or bad? See here we have a rally candle, 1, 2, 3 base candles, again a rally candle. The 5 minutes price structure is also good. That indicates the quality of the 15 minute zone is good. So definitely we can plan a trade in this 15 minutes as an LTF time frame. Now let me move on to the 15 minutes time frame. So this is the 15 minute zone, and here we got the trade. In case if you want to further reduce the risk, you can plan type 2 entry also. We have a rally, 2 base candles and a rally with gap. Just to minimize the risk, type 2 entry. But here at several times, 15 minutes candles, it stayed inside the zone, and then the overextension is completed with a pullback to daily EMA 20, and then Reliance stock is started moving up. That way it gave a very huge return. If you look from the daily point of view, daily time frame point of view, let me get into the daily time frame. Now look into the trade here. So this is daily EMA. At daily EMA, we have a 15 minutes demand zone, because there is no daily time zone, we have a 15 minutes demand zone. There we got an entry. Once this overextension is completed after pullback to this 15-minute zone, which is having a daily EMA confluence. That is very important. EMA 20. Which EMA 20? Daily EMA 20. And it is having confluence with the 15 minutes demand zone. That is the point, important point we all should observe. At that confluence, overextension is completed. That's why we are planning a trade in this zone. And then prices are started moving up after that. So this is the recent trade. So when we got the trade, somewhere at 2654. Now it is at 2921. That means almost 270 rupees, close to 270 rupees profit we got. And when we got the trade on January 23rd, so in less than a month, Reliance has given a very good profit. So this is these are all some of the advantages of price over extension. The price over extension immediately after that pull back to the EMA 20 is a great trading opportunity. Hope you got better clarity about this. Now in the next lesson, let us focus on odd enhancers. So with this today's lesson, we have completed lesson 17 and odd enhancers is part of lesson 18. So this is again another important concept that we will be learning in detail. But regarding price over extension, if you are having any questions, please put them in the comment section. So I will try to address. Hope this information is useful to you. Let us all meet again in our next video. Thank you.